John Stoltzfus is Managing Director and Chief Investment Strategist at Oppenheimer Asset Management. John, good to have you with us here. Thanks very much. Looks like, at least a framework deal should be announced whenever earliest possible. That seems to be the indication from everyone in the Trump administration with India. What do you make of it, John? And what will it mean for India? Because, it's widely acknowledged here that the impact because of these tariffs to the Indian economy is not that large because we're not a big exporting nation to the US. But the impact is indirect through global markets, etc. So we get a deal, but there's this. Does it clarify things a lot for investors here, stocks here? What's your sense?
Well, we'd have to think, first of all, thanks for having me on the show. It's great to be with you, especially in these times. Would have to say this, I think what we really need to look, what's the real goal here? And a lot of that has to do with the diversification of the global supply chain, with India likely a major beneficiary of it. So I think in terms of, for India, there's opportunity here. The clarity that was expressed, at least in the point of the view of the administration in the States from Besant, is that it's much clearer what the negotiation points are with. I think it's up to Prime Minister Modi and his team in the meetings that they have with the U.S. and Trump administration. I think is what we'll see. So I'm waiting eagerly to hear how these things work out. But we are very big believers that this is not the end of globalization, but rather is re-globalization away from a one-country-centric global supply chain. And we think it will benefit countries large and small, both developed and emerging in the process. We do, by the way, though, are wary of high tariffs. We're not exactly great fans of tariffs, but we do realize that the administration, at least from the president's perspective, sees it as a negotiating point. We wish it could be done another way, which would be less worrisome to what we've seen earlier to the markets.
Hi, John. That's an interesting point, that this is not the end of globalization. In ways, it's re-globalization. That's an interesting way to look at it as we see those supply chains shift. So as we're dealing with this flux, because it's going to take a while, right? Deals with which countries, where are these trade flows going, where does manufacturing shift? As all this happens, in terms of the equity call, where do you see the U.S. market itself?
Well, the U.S.
Yeah, sure. Carry on. Yeah.
Great question. The U.S. market, it's interesting to note, from the start of the year until February 19th, was up about 4.46%. And then it took a spill where it was down almost 19%. A lot of that on worries related to what would happen in terms of these tariffs. It was after the April 2nd tariffs. A lot of people expected tariffs would be much milder or would be much more exemplary of what might happen, but not so drastic. And then since then, we've seen the S&P 500 rally 11%. And if we look at the sectors that have really done well in here since the bottom so far that we saw, which was on April 8th, the S&P is up 11.6%. Information technology, I find this hard to believe, is up 16.4% from its low. Consumer discretionary is up 12.7. I'm looking at a Bloomberg terminal here. Materials up 12.27. Industrials up 11.87%. And I won't belabor what the rest are. But if you look at that and Q1 earnings results, which show a number of key sectors, including technology, consumer discretionary, and healthcare, a double-digit earnings growth with only 3 sectors negative a double-digit earnings growth, and those, as I recall, are materials, energy, and the third one at this hour of the night in New York fails me. But my point is, it looks like the market is telling us a great place to be is not joyously optimistic, but certainly constructive on the market, and looking to see where the most damage was done, which is likely where some of the best performance will be in aggregate coming out of this.
So you don't see a major dip. You don't sound too concerned about U.S. equities. That would be the right way of looking at it, right?
Well, you know, the thing is, really, I think that in terms of the, from observers of this market, I think this was very much, at least in sentiment, was similar to to what we saw at times during 2022, when a negative outlook is what really brought the market down, because most of what was predicted by the bears in 2022, a recession, didn't happen. Drastic drops in employment didn't happen. The economy didn't fall apart. You know, all of this stuff. What it was remarkable sentiment that was generated from communities within market participants in the states, and it was bought until about October of 2022, and that's when the rally began. The bears still thought there was going to be a recession in 23 and 24. Didn't happen, and it's the Fed has done a great job, we believe, in that it raised rates 11 times from March of 22, and then it went on to 9 pauses, and then began 3 cuts without a recession. And we think a combination of the Fed and hopefully a lessening in the extreme nature of the tariffs and the negotiations will enable a rally here that will be sustainable and economic growth, that if at a modest pace, okay, as we go through the first hit of the tariffs, will be remarkably sustainable.
Sure.
All right, John, appreciate you staying up late for us, but very quickly, if you could tell us, where does India feature in the list? You know, because if you're talking about the month of April, it's actually belonged to the Indian markets. We have been relative outperformers. FPI flows into India are positive, while other emerging markets haven't seen positive flows. So we believe we're in good space. What's your take? Where does India come in the pecking order?
Well, we certainly are very pleased with it, because we have, when in our view of this re-globalization, we see countries that include India, Korea, Japan, that's South Korea, Japan, Mexico, and a variety of other countries across the board will likely do very well from this. And India, because of the scale, size, and the sophistication that it has proven in various areas related to technology, related to medicine and logistical systems and things. This is a real big story, and we think this is still very early in the story, and it's a nice rebound from a period where, like the U.S. markets, it experienced a retracement of significant advancement, and now it's coming back nicely.
John, it's a pleasure. Thank you very much once again for being here with us here on CNBC TV 18.